And we're back into the Crashlabs. It's, guys, I feel like it's been a while. We did a whole bunch at PDAC, and then we had a little gap. And then the market's been doing kind of it seems like what we hoped would happen. And we haven't been commenting on it, so it's interesting.
We knew it was going to happen. Gold up, lithium down. Let's go.
The broken clock is right.
This blind squirrel found the nut.
Yeah. Yeah, exactly. So, okay, well, let's start there. What do you guys think about the markets right now? And how do you feel about what we're seeing? I know there's divergence in thought and optimism within our group. So why don't we take a run at that? C, do you want to start?
Sure. I think it's like what you said. A broken clock is right twice a day. The markets are cyclical. If you hold long enough, you're going to be right. And I think it took gold a while, even though the fundamentals were all pointing in that direction where, you know that historically these are the factors which make gold go up, and it looked like gold was a slingshot pointed to the moon, and it looks like it's finally breaking over one of the more important resistance points. But is that a good thing for our economy, like other markets and such? Probably not. Like, being a gold bug is a double-sided or double-edged sword. Like, you're right about gold and you can make money on that, but I don't think it's good for everyone else.
Yeah, so it's sort of hard to celebrate, you know.
It's hard to celebrate, but I want to celebrate because I've been telling people a long time that it was inevitably going to come. Like, in general, like, the governments cannot appease everyone just by spending our hard-earned money and going in debt and doing stupid stuff with it. We knew it was going to come. Like, look at our cost of living is at an all-time high. Normal people, or we can't go out to a grocery store and just buy things that we kind of want to do. We have to
you have to make choices.
You have, yeah. How much is a bag of Miss Vicky's now?
Too much.
Sacrifice that salt and vinegar, but
or how many chips are in the bag of Miss Vicky's? That's like the
you're going
one.
to Old Dutch now. These are Old Dutch days now.
Yeah.
This is fucking
no frills brand.
Yeah,
but I think it's bittersweet. I think anyone who's waited this long in this space is going to do very well. We're still waiting it to spill over into our small little niche of a niche. I don't think exploration companies have seen capital yet, but look at gold producers, especially the higher cost producers. Equinox and MUX MUX are just on fire right now.
Yep. Matt, what do you think?
Well, I guess it's when you look at those things, they were down so much in February and in January, right? Like, it was a nervous time if you were a gold bug when everything dropped down. I think the GDX was down 18% at one point in January or February at some point. And, it's up 3 now on the year, right? So that's a pretty big rally. And obviously gold just hit an all-time high. I think that it's a tough one for me. I like the long-term argument as well. Like, I'm with CJ that I think that inevitably when there's more money in the world, then things are going to be worth more. It's kind of that inflation motto, specifically for gold. You look at coming out of the recession in 2009. I mean, it had those 3 years of giant bull run from 1,000 to 1,900, but then it crashed again, right? I don't really know why, but it did. But if you look at one of the reasons, maybe like the Euro debt crisis happened in 2012, and you had these times where everything kind of correlated together, like everything went up. And so the only hesitation I have right now is that everything is going up, right? If you look at the NASDAQ, the S&P, the Russell, gold, the TSX, whatever it is, I mean, like, things are all kind of going up together. So if you have a negative event, does everything crash? And what sells first? What's the first thing to get out, right? Is it the apples of the world where all the pension funds have their money, or is it where people just put their money in and have lost so much money over the last 15 years? So I'm a little bit more cautious, I think, because, it's just starting. I am optimistic. I think that, I'm a chat with a lot of the metals guys. Like, copper is a huge topic these days, right? People love copper. They're like, this is going to be this is the thing. But yeah, it's really sensitive. Like you look at uranium right now. Like I remember when we were at VRIC, and I was on the escalator going up out of the conference, and everyone was talking about uranium and how Bill Gates is building reactors, which of course he's been doing for like 20 years now. And he, that was the talk of the town. And if you look at the charts on uranium, it had hit 110 spot or 105, whatever it is, and it's dropped all the way down. Look at the uranium companies, dropped all the way down, and now they're bouncing back a little bit. But like that toppiness, I get worried when everyone I talk to is like, we're at the cusp of a bull market, and everyone's saying the exact same thing. Everything's kind of up together, and I'm like, So I get a little bit nervous. And I also think that in our space, with a lot of the fund managers I'm talking to, people made a lot of bets already on this bottom. And I think that we're going to hit a little bit of a capital pause. The people I'm chatting, it's like people have invested, we've invested, people have put money into things. Things were really cheap. It'll be interesting to see how much money is actually in the space, right? Because you need more than just a few funds who are putting in. I think people made their bets, and they're with things. And I know we're really excited. We'll talk about it today, but we're really excited what's coming. But you need things to actually happen. So I'm more cautiously optimistic. Long term, I'm pretty optimistic. Short term, I'm actually a little bit more. I'm treading carefully. Actually, that would be my take on it.
Yeah, I mean, I'm somewhere in the middle here. I think from my perspective, I've been looking at the macro market sort of signals. I've been somewhat fixated on the Canadian economy, which is new. More of like as a canary in the coal mine type of thing for what may be a broader thing across the West. And sort of, I do think Canada is going to be one of the first, if not the first, to really feel the pain in what's to come in the financial markets. I think like the Canadian banks are really, really looking scary right now, even though they're, as you said, melting up. I mean, with the debt and the bad loans and the mortgage issue, the building issue, there's like record number of fires, for instance, in developments, which is always odd. There's so much going on there, and it's hard to see Canada's industry's really been gutted, and you've got it all piled in on this real estate market, and now the banks are, holding, they're sort of holding bad notes, I guess you could say. It's very reminiscent of what happened in 2008, and even the warning signs that they're coming out with are somewhat similar as well. They're like, well, we believe there's a material risk here, but we don't believe it's a systemic risk. And it's like, well, that was exactly what they said. That's exactly what Bernanke said ahead of 2008. It was like, oh yeah, there's definitely a risk, and it's definitely bad news, but it's not going to be systemic. It's not going to cause the banks to fail. And I'm not saying the Canadian banks are going to fail. I'm saying that there's going to be a correction, and that's going to be scary. One of the things I think I'm paying more attention to is the fact that we have the metals market vis-a-vis gold price, silver price, copper, oil, commodities as a whole. Are tracking nicely. They're all tracking up, and like you said, they're breaking records, right? And we haven't seen a ton of money fly into the issuer side, so into like the miners, for instance. That's a new phenomenon that's sort of happened in the last 5 or 6 trading days, where we've seen finally that some of that money trickling in and people sort of placing bets, as you put it. There's not a ton. Like I remember the last couple of like pops that we've had in the metal space, there was a lot more reactionary capital injected at the bottom of the pyramid. So last time we got a pop in COVID, there was like an explosion of PPs for junior deals, whether it was like Canaccord or BMO or within 30 to 60 days. And this is a much more profound pop on the metals pricing, by the way. But there was a lot more of sort of an imminent, people rushing in to deploy capital. We haven't seen that yet. So that's not a thing yet. Why is that not a thing? Is that a thing because that capital just doesn't exist? So the long-term sort of true believers have been caught with their pants down in the last couple of bumps and have blown their wads, and they don't have the capital this time around, or they're scared because of the last couple of kind of like, head fake moments on a bull market, Is that kind of shell shocking people into like not really making those bets? Again, it's the other thing too, is as Matt, you sort of pointed out, is that there's some of these other, whether it's like the NVIDIA stock or whether it's the Apples and, these massive tech companies now, are they sort of a replacement, or are people seeing them as a replacement or as a hedge on market, chaos? Are they seeing these things as like so stable, too big to fail type of long-term investments that are sucking some of the oxygen out of gold? And ultimately, if those things pop, will it drag everything back down? I don't feel like we're going to get dragged back down, just because I don't feel like the issuers are popping the same way as we're seeing the commodities themselves popping.
But that's the scary part. That's the scary part to me. So when I'm treading cautiously, it's that you've had this pop in commodities. Everything else is still up. I mean, you have like the CEOs of Amazon and Microsoft and Facebook all coming out being like, NVIDIA has the GPU that you need for the future of AI. They'll say like, this is the one that you need. They're paying $40,000 a pop, and AI is just going general. And so that could be treated like a growth stock, right? That's why people love it, because they're like, this is like venture without venture, right? It's a whole new area where people think of it as, instead of the internet, you've got this new wave of things, right? So I think that it's more an opportunity cost thing where people are like, well, I could be pretty safe and stable and buy basically giant $1 trillion stocks. And you don't have that movement yet. You don't have that general retail. So it's interesting because the funds have been placing money, like the resource funds, of which there are like 9. They've been putting money into things. But yeah, that retail trade has not, you just don't see that crowd coming in. And so what happens if there is a drawback? What happens if there's some global event, where there always is, where something bad happens again? And what's the first thing to sell? Right? So that's why I'm like, you have seen a move for sure. Obviously, off the bottom of the year, there's been a big move, right? Again, like you've had a 20% turnaround in the GDX and GDXJ, and the TSXV bouncing off like basically all-time lows if you adjust for some biases, is now even for the year. But man, it's still a tough time, because there's just not a lot of money in the space or a lot of interest in think about how much money people lost off that COVID bump, that 6-month time where there was, however, I remember, like the same way you're saying, it's like so much money was raised. Everyone wanted to be in resources. And then everyone lost their shirt again.
Very quickly.
Very fast.
Was it their money that they were losing?
Even worse, if they were borrowing to play it, right? That's even
why
worse.
All of the cryptos and online shopping went crazy during COVID in the States and stuff, because it was just a lot of handouts at the time as well.
Yeah, but I mean, but those things have bounced, right? Like Bitcoin hit all-time highs. Ethereum's back up to 4,000. Even like Dogecoin was up 30% the other day, right? So you actually have those alternative asset classes. Everything is moving together right now. That correlation is what scares me, because what's the first one to drop when something bad happens? And, you're going into an election year in the U.S. The U.S. economy looks actually really, really good right now. It's a weird space right now. You have wars in the world are always a very interesting thing, right? So usually good for metals in general.
For such a small sector like ours, is that really a huge worry, this lack of capital, where not a lot of capital is needed to substantially move it in general?
I think for a melt up it is. I think if you want to see like an 09 to 11 boom, or like that 2003 to 7, kind of like that crazy bull run where you have like the idea, when you list, you're like, I have an idea and it's worth 20 million. Right now an idea is worth 2.
Yeah.
Right? So like if you want to see that 10x just on a good idea, then I think you need actual, you need retail capital. You need more people to care, rather than just, right now still things work, right? When things work, it's great. I mean, like, there have been some big wins. But to have everyone, that generalist capital, like it was with the uranium, like look what happened with all the uranium names. Every uranium name went bananas. Like a nothing uranium name was worth $20 million, $25 million, $30 million just 2 months ago. Mm-hmm. And I think that for the whole space that you need a little bit more of a consistent move. But that is, you see the potential with uranium. You see it with lithium. Like when lithium ran, like the whole world came to lithium and the whole world came to the venture. And so it'll be interesting to see if that happens for gold. I'm surprised that hasn't really happened for oil on the venture. There's so many oil names. Oil's been great, and hasn't really moved that way as well. Adventure's so strange right now. it's weird.
It's very strange. I mean, I've been looking at, like, again, back to Canada, there's 5 big banks, so it makes it sort of easy. But I've been looking at the banking stock and the trend that's been having, and it's very peculiar. It's very reminiscent of, like you said, 0304. This is very reminiscent of 0304 in the sense that not the driving factors, like we don't have China industrializing and a booming middle class in China and like building like crazy, so that it's a little bit different in terms of the factors as to why. But it's interesting that the kind of, I guess, the progression of, copper, gold moving, and then copper moving, and, all these sorts of things, and then slowly kind of building, and then, real, like it's sort of less aggressive. And then suddenly, something like 08 happens, and that's just like gas on a fire, and it goes insane. That's more like what happened in 08 was more like what we saw with lithiums, or as you're pointing out, to like a uranium.
You mean in 09, like on
yeah,
the
like
09,
that's just like
right.
completely mindless. Like every company in the space is just de facto worth $100 million. Like you could have a vein or something.
Totally, and that was really big stimulus, right? Like the two similar things is that you had giant stimulus during COVID, and you had giant stimulus coming out of the recession, right? So you had all this money pumping into the economy twice, and both those times people ran in because there was more money, and then they ran out. But I guess the difference, I'm hoping the difference this time is fundamentally metals. They seem good.
They seem good. Yeah,
they seem like they really do fundamentally seem good, right? Like you talked to a lot of. You read, it's usually metals people who are saying that they're good, but
no, I think they are good. I think you've got assets that like are currently in production that maybe, look at, like, they've done a good job of getting their costs down. Like a lot of the mining companies have done a great job getting their costs down. They did that when they had to. They showed that they can do it. Because they did that and they can afford to mine that material that didn't cut the mustard in a tighter cost environment. Now their costs are going back up again. I mean, that's somewhat conflating with the issue of like COVID and price and inflation and all these other things and labor shortages, things like that. So that needs to be kind of stripped out of the math. But at the end of the day, there's also going to be all the residual material that they didn't mine when it was, when they were up against the wall at $1,400 gold or $1,300 or $1,200 gold, where they had to just stay alive. So they're going to, high grade and cherry pick. And then you still have all the rest of their stuff that they have to mine. So they're going to go through that at, if they can afford to make money with it now, then they will. And does that mean that their costs go up? Yeah. But I think on average, I think this is a really good climate for them. They're going to make more money. And I think, when we see the torque that we're going to see on a $300 move on gold, it's going to matter, especially if it hangs in there with these producers and stuff. So to your point, whether it's gold or, I keep saying gold, but it doesn't matter if we're talking gold or copper or some of the base metals. At the end of the day, in commodities as a whole, but they are looking more attractive. Those businesses look like they're going to be better.
They look better, and it's interesting. It's kind of like what happened with oil, right? In oil in 2015, when oil crashed, then all the oil companies' shareholders got really pissed because everyone was worried about NAV, right? Everyone just wanted excess barrels. See, do you remember like that oil run where it's like, how many barrels unrisked, unreserved do you have? 30 trillion, right? That sort of thing. And so, but then all of a sudden it was like, no, that doesn't matter anymore. Let's actually make money. And I think that this cost inflation that occurred and like the quick crash in metals, I think that, Denny, to your point, I think that people, there was mergers, there's big companies now in gold, and they have copper to balance it out. And it's like, it seems a lot more stable now. That they've like everything's kind of more under control and they understand it's like profitability, and so that is a very good thing for the space if that does happen.
Yeah, like there's one stock I'm watching. I am invested in it personally. I should prelude that, not by a lot, but just a little.
This is not investment advice or guidance.
This is not investment advice or guidance, and do your own homework. But one of them I'm in is Jaguar Mining. And so it's interesting. It's got a small production profile, and it's making positive cash flow, and they're talking about hitting some higher grade material, and that could have a very profound effect on cash flow. And so you couple that up with prices, and so that's a little mining company that's punching above its weight class, and the stock has done really, really well. I mean, it's doing really, really well these days. So yeah, I mean, this is going to be an interesting kind of thing. And I think the longer it takes, almost the better, right? Like I'd prefer slow and steady growth here in the market and, having an educated market rather than like a frothy, what happened with lithium.
I think that stability, like the longer we can if it goes crazy and you have a spike, great, but that's scary. But if they can actually just,
creep up there.
Yeah, man, like that's great. That would be really good for the space. Like if the venture can hit 600 and actually stay there for a bit and start moving up, like we're still like pretty close to COVID lows, right? It's we're not that far away from it still. So
we're gonna finally make some money or what?
Yeah, we're making money right now. Yeah, we're making money right now. We've had a pretty good quarter actually.
Awesome. Again,
like we at the end of the day, still discoveries are worthwhile, right? So we still, if you can still pick them right, and there's some alpha to be had, and we had some fun stuff. I think this is gonna be a cool year. Like we have interesting names coming up. There's a couple of public offerings. We have Borealis and Magotes. So we have like these Nevada Gold and the project beside Philo, which is going public, I think, within the next 6 weeks, and so those should be good. But yeah, it was actually a pretty good quarter.
Yeah, it was good. I'm really excited about a lot of those deals. It looks like we've got movement on a few other ones too. But I think no, I mean, we got Aquitaine too with the Discovery guys. So that's really cool, and that's the market hasn't heard that one yet, but they will, and that's a French deal. It's going to be big. It's going to be amazing. So we were lucky enough to get invited into that, and we're really thrilled to be part of what that's going to be, and that's again that's just stellar deal flow, so we're really excited about that. Borealis, as you said, I mean that's on the doorstep of going public here, right? When is that happening, by the way? When's the RTO closing, and when's that all going down? Or can
if we had Kelly on here,
he can tell us.
Maybe
soon. It's a soon thing.
Yeah, it's a soon thing. Having just dealt with the venture for a fairly long time, that's a hard place to deal with. Truthfully, it's a hard market to deal with. A lot of red tape, a lot of all of a sudden things pop up, and you're like, but the rules are this way.
Yeah, but the timing couldn't be better.
The timing is great. But yeah, because you see gold deals react. I mean, like we have a big position in Southern Cross and Mawson, right? So, like that deal is great. That thing has been a huge success.
And anybody saying that they didn't hear Southern Cross and Mawson first from us, listeners of Crashlabs, you definitely heard about it first on Crashlabs if you've been at.
Yeah, it's been a good one. Mike has done a great job. Southern Cross is going to co-list here, which is great. There's going to be a lot of things. It's interesting. Mawson is going to have a. So who was on here talking about how the only alpha is from macro policy changes? Dave Lotan, right?
Yeah. Yep.
And so the big thing right now is the uranium, back to uranium, the Sweden moratorium, right? So this thing in Sweden, what people don't know is Mawson. Apparently the thing is they're voting to lift it. So there's really two plays, like Garrett Ainsworth's District Metals is one, has like this giant uranium vanadium thing there.
Well, I like Garrett.
What you don't know though is that Mawson was actually founded in I think 2004 or whatever it was as a uranium company with uranium assets from Arriva in Sweden. And they eventually moved into gold and uranium. And so they have this access and portfolio and other ideas of uranium in Sweden. And so what you're going to get is this 51% holding of Southern Cross is going to get dividended out to shareholders when Southern Cross lists here. And then you're also going to have this like uranium focus on things. So I think that, and again, that policy change, that access to deal flow, the relationship, stuff like that. So that'll be a pretty interesting play.
What are your thoughts on uranium now? Like, do you think that, I mean, it's sort of decoupled from what we're seeing.
We own one uranium position.
Right. No, but I got it. But I think like in general, what are your thoughts on, there was like a very, hungry uranium bully, everybody was super throttled up about it. There's limited ways to play it. But with what we're seeing en masse right now across the other commodities, gold, silver, like the precious metals basket and beyond, copper, base metals. Is uranium independent of that, you think?
I think so too. I had a great chat with Rich Patricio and Phil Williams. Phil was on our show, right? So Phil's running ISO right now. Rich is chairman, and I think that they were chatting about this, and ISO has what the highest grade undeveloped uranium thing in the world, and then obviously Rich is on the board of NextGen, so you have a pretty good insight into uranium. And their big thing is it doesn't really matter, right? Like it's such a small market. I think it's like $4 billion a year. It's such a small marketplace, and it's so controlled by a few different players. And you have these ebbs and flows for sure. I mean, uranium was like 2 years ago, $30, and now it's $90. So yeah, I think totally it's like its own beast.
I just want to lay this down out there that I'm not wearing socks because I think they're these fancy Justin Trudeau socks. I think they're cool. It's because I actually stepped in a puddle on my way to the office today. I got a double soaker, so I'm drying them out. So for anybody who wants to throw fucking darts at Denis in the chat about my stupid socks, well, too bad, so sad. My feet are wet. Yeah, no, it's good to get those guys' perspective. It is. You do always have to remember that uranium is a small market, and it's very tightly controlled. It's hard to play.
It's hard. NextGen's almost $12 though.
Yeah.
NextGen's like $12, but what happens? I still don't understand.
Where's
to
Mega
this day.
at now? We own some Mega, don't we?
Yeah, that's our position. So we were buying it again. So it's at 44, 45, I think. I think it's still trading at like 68% now of NextGen, just on a fully diluted basis. I think 70 cents on the dollar of just its NextGen holdings. And it also holds a bunch of ISO and a few other things, right?
Awesome.
So that's our proxy into the space.
Nobody knows the space better than those guys. Like
They know every project.
They know every single project in every single place, and they no one knows it better than those guys, and they have an incredible basket of exposure. And so
they trade projects like they trade stocks, eh? Because they
it's amazing.
yeah.
Every project has gone through them at one point.
At some point, I think Mega had at one point, I don't know, like 80 projects or something, right? So
yeah, it's really cool. Lithium. So where's that going to go? What's is it coming back to life?
So you see Sigma. So Sigma is the proxy here, the hard rock guys, right?
Right. What happened with Sigma?
So Sigma had this, I don't know if it was a lawsuit. I don't even know what it was. Anyway, LG threw something.
This is the big Brazil massive.
That's the big Brazil hard rock.
In Brazil.
Yeah, it's 20 bucks a share. They're producing 200 and something thousand tons. They're talking about doubling it now, right? And what they do is it's a hard rock project, and they basically sell, instead of making a lithium hydroxide, and forgive me for my ignorance in lithium, but instead of making the 30% whatever
like
product,
a lithium concentrate or whatever,
they basically just sort and they sell a 5.5 or 6% rock.
Yeah, because that's what the grades are.
Right, and so their grades are what, like 1.5 or 2, and then they do some sorting, and then they do some processing, and you get like a 6%, 5.5% concentrate, and they're selling that for $13.50 a ton US. And then I think they net 1,050 or something like that, right? And I think their costs are $450.
Where do they process it? Because there's other guys in that area, in that Sigma area, that are also mining that same pegmatite, 2% to 4% kind of.
So I think what they do is, so they send it to the port, and then it gets on a boat, and then they send it to facilities that are owned by LG or by Ganfeng or whoever they're selling it to, and then they put it through their plants, right? And I think that was in my memory of like the Canada Lithium days in Quebec, where they were building a hard rock plant on the project in Quebec. What they tried to produce like the full product, not ship a rock. Now that was an hour north of Val-d'Or, so that would have been really hard. But I think that's the difference, right? Some of the hard rock, we're in a new hard rock play where it's like that's the same idea. You just sell the rock on the boat, and you make it. It's like a quarry. It's like really basic. So it's lithium, but it's a basic operation of it's $1,000, $1,200 a ton, and what does it cost you to mine? And that's the play, and it's interesting because it's such a big company, and it's not that complicated an operation, it seems.
Yeah, it's weird because I remember when Patriot came on the scene with their thing, that was like the comp. That was like I hadn't heard of either of them, and then all of a sudden, I looked into the Sigma and looked into their grades and like all of that, and I'm like, this is like the biggest thing ever. This is like the biggest, most profitable thing ever.
Sigma's very big.
It's very big.
It's awesome.
So what happened there? So what's the drama with Sigma now?
Well, I think that they're getting a lawsuit or something from LG because they didn't send them enough product. In terms of their offtake, and then that was the drama. So the stock dropped from like 21 down to 15, and now it's back up at 20 because they're expanding their output. And honestly, it looks great. It seems like a good proxy for the space. Lithium's down to what, 15,000 or something, which is still 3x what it was 10 years ago. I actually like lithium right now. Truthfully, I think it's a good play. I still like the long term. I still think there's a lot of it in the world. I think that the biggest thing is like, yes, you can, middle of nowhere, it's almost like you're shipping phosphate or you're doing a more industrial metal, right? Like just something, where's your port? How close to surface is it? What's your strip? And can you make it a saleable product in a very limited amount of steps? And I think that if you can find projects like that, they're going to be good. That's why North Australia always kills it, because it's like right at surface, drive it to port, that's it.
And right beside Asia.
Yeah, that's also why. Yeah, totally. Because everything's still going to Asia, right?
Yeah, that's interesting. So we got into lithium. Can we talk about this? We got into a lithium deal recently that is in South Africa.
Yeah, so this asset is enormous. It is so big. It's 190,000 hectares, kind of just south of the border with Namibia, pretty close to the coastline in South Africa. 190,000 hectares, and in the 60s, there's this PhD geologist in Cape Town who's very well known in lithium. His boss in the 60s knew this project and mapped across 40 kilometers of the endless amount of kilometers in this project. He mapped 51 spodumene-bearing pegmatites. So if we take back to the bull areas of lithium, like when everyone was going crazy, like the Brunswicks, remember we were chatting about Brunswick here about a year ago? They were like, look, we have hundreds of pegmatites, but we don't actually know if they're spodumene-bearing. Right, so that's a big thing. Like, do you have actual lithium in the pegmatite? So this has 51 spodumene-bearing pegmatites with lithium crystals up to 1.5 meters. Like, they are enormous. And that's just from basic sampling in the 60s. Meanwhile, on one pegmatite, they have a 30,000-ton stockpile of material, about 1.5%, and a 60,000-ton resource underneath it. Around it, and then 5 different pegmatites that are all over 300 meters around it. And everything comes to surface. You drive right to the project. And the plan there is basically you start mining. You are 600, I think it's something really far. Like you're 680 kilometers away from the port in Cape Town. That's where you're sending it. But you create these 1-ton bags basically of the 6%, 5.5%, 6% concentrate. Concentrate, just rocks. And you throw those tons onto a boat and they get sold for the same thing that Sigma is selling, right? And that is the plan. And you have 2 angles. You have this mining angle where you have this stockpile on surface. And then you have this like one of the largest exploration plays in lithium I think I've ever seen, if not in any commodity. It's just enormous.
And what's the name of this thing?
The ticker is MML, Moonbound Mining. There's a few things that are going on with it. They're just closing a deal right now. Anyway, really interesting play. Guy running it was running a alumina and bauxite production in West Africa prior to this. So James is, they got a guy in there that actually knows how to run an operation. Because again, like I said, like it's a quarry. Like this is not, you're not drilling really deep. You're not trying to, recover a copper concentrate with all these nasty materials in there. It's like mine, sort, sell.
Yeah, it's like a limestone quarry. It's like you're just you're in.
Like it really is, and that's why a lot of these areas were old feldspar mines, right? Like you're creating this like base product. It's not complicated. It's like an industrial production facility, and so. But the upside there is like if you look at the stockpile and like it's like a 30-meter pit underneath it. There's like 4 different pegmatites that are spodumene bearing within a kilometer of it. It's pretty cool. It's a big project because it's also 190,000 hectares and it's this huge continent-wide pegmatite field. I haven't figured out why there's no more lithium across the continent. Like it stretches from the coast of South Africa on one side to the coast of South Africa and up to the north on the other. It's just huge. So there's a really good macro that's attached to it, like big fluid flows and a good reason that it's going to be there for a long time. So it's a pretty fun project with really good grades. There's historical drill holes in here, 25 meters of 1.5%, 2%. So you've got the right grade of lithium, the right, crystal distribution, and you obviously have in very limited work, you have all these pegmatites. And what's great here versus, for example, like the James Bay region is access, right? You drive right into this thing. And also there's no cover. So where you are in the world, not a lot of vegetation, not a lot of trees. So to find more,
Is it oxide too? You know, like is it kind of oxidized, like all the stuff around these? The pegmatite itself, likely, you know, it's never like that's not really a big limiting reagent with like pegmatite mining, but like in and around it, is it all kind of oxidized rock?
I don't know actually. That's a good question. That's an interesting question. Because it would make sense because it's just there's nothing on top. There's no but what I was going to say is hyperspectral will work really well there to find more.
Oh, nice. Okay.
Because we did that right with Spot. We did that a lot when the lithium boom happened. We used hyperspectral really well to identify pegmatites in the worst areas to use hyperspectral. Like James Bay lowlands, like terrible. It's all trees and swamps and like no outcrop, and it still worked pretty well. And so here it's like you're just going to have this massive satellite data field. Anyway, that's a good one. I like that in terms of lithium. It's a good hard rock play. We don't know a lot of lithium names. Our NOAL, the brine, they put out this huge resource, 2.5 million tons of 650 ppm, like amazing grit. No one cares.
Well, what are we doing? What are we doing to take advantage of gold? What are we doing to take advantage of gold? So we've got really good exposure there through a bunch of names, but let's maybe talk to that because that's on the move. And how has this changed our process? Has it changed our process? Has it changed anything for us right now on the bets we've placed, reevaluating our portfolio, what we feel like, you know, keeping versus turning over versus, you know, reallocate? Like, where's our head at on that?
Yeah, so I mean, we're all like gold. Like all three of us seem to like it, right? Like we like the plays. I think that we're focusing. We all like grade and like big ideas, right? I think that would be all three of us. Like if you're sitting at a table, it's like, what do we want? We want grade and we want big ideas. And so, you know, NFGs of the world and your Southern Crosses, big positions, great torque. We own a decent chunk of Amex, which we were picking away at when it was, you know, $1 and stuff like that. That's been great. This Founders Metals down in Suriname, another orogenic thing. Like it's been, you know, I think they just drilled 30 meters, 12 grams, and they've been hitting amazing.
We've pressed our bets a bit on some of these names.
Yeah, we haven't really taken. We've definitely circled capital into our best names. That's kind of been our move here, especially when things were down. You know, so you own Nevada King, you own this new one, Scorpio Gold. It's kind of cool down in Nevada. Again, like we played in this Viore deal. You see that Viore? Like it's been around for so long. Cisco put $6 million in. They raised $20 million. We're in that deal.
So what changed with that one? Because, you know, you look at a lot of the same old stories, the same old projects, and especially if we've been mired in this bear for 10 years, right? So why would that all of a sudden get new life?
This is like Denis echoed. So we had a call, and the CEO of Cisco is there talking, and he's like, the reason that this didn't work is it didn't have $20 million. And it was basically like, we did this at Windfall, now we're going to do it here. And it's like the exact same story. And they're like, if we don't have $20 million, we're not going to do it. So we're putting $6 million in. We're going to own 25%. And we're going to raise 20. And that's why this is going to work. Because it produced 800,000 ounces at 10 grams. We think there's probably 800,000 ounces at 10 grams there still. And we're going to make this much bigger. And we're going to chase it down. We're going to drill the crap out of it. And that's why it's going to work. Whereas before it was like, here's $1 million here, $2 million there. Here's some flow through money, right? Like that. And that was the preventing factor. And if Denis screamed anything on our pod the last year, it's like, if you don't have the money to keep drilling, especially with things like that, it just doesn't work. And I think that they were right on it, right? Like they were just the Cisco guys were like, yeah, that we're in. This is going to work. So that one's pretty interesting because that's like, you know, the gold is there. You need a lot of drilling to expand it, and it's a lot like Windfall. It's very, very similar.
Why do you think they decided now is the time to do it? Is Windfall on, they're getting ready to sell it and move on to another project? Or like it has nothing to do with timing?
I think Windfall's set in stone now. I think they've got the money together. Like the flight path for Windfall is set in stone now. They've got the money to develop it, and they've done their deal, and you know, everything's there. That ship has sailed, and now it's time to continue to grow new things. And so I was talking to Sean. I should get Sean on here. He was supposed to come on at PDAC, and he ended up canceling. I don't even think he ended up coming to PDAC. So that would have been a cool pod. So we'll have to follow up with him and get him on here and ask him some of these questions. But I think in my conversation that I've had with him not that long ago, yeah, he's really excited about what's going on.
Yeah.
On that in some of those assets, and it looks like it's just rinse and repeat what was happening before. Barkerville as well. Like there's
another one.
Yeah.
They have a great recipe.
Yeah, it's
They
a
know
good
what they're
recipe.
doing, right?
Yeah, they know like if you spoon feed these projects money, like it doesn't sometimes like there's certain things where you throw enough money at them and they were 100% work.
Yeah.
And so and they're really good at raising money. So they just have to look for assets like that.
So what was pre-money? 14?
So it was a 12.5 cent back end. So yeah, I think it was a 12 million pre-money.
12 mil, and
Yeah, so it was priced like they didn't mess around. Like they weren't like, oh, we're gonna press the stock up and then raise. Like they got it. They're like, no, everyone's gonna make money here. We want to close this fast. We want to drill this season. We're putting in 6 million, so we're gonna price the deal. Like we were in these chats, and yeah, it's a good one. It's like it's not. I don't think it's gonna be. I don't know if it's going to be like 100 bagger or anything like that, but I feel very good about this. I think it's going to trickle up nicely. They're going to drill a lot. I think they said they were going to drill 60,000 meters for the next 2 years, which of course is an arbitrary number, yeah, like obviously, like very good team, very good advisors, and they own a quarter of it. So
that'd be fun to watch to see if they can replicate the same thing and have a steady, gradual trajectory and find some new zones. And
yeah, and I think that like that's the plays we've done. Like it's a little in gold especially, right? Like, you know, a little bit more. It's hard, right? Because finding new things is obviously so hard, right? It's really and you have these things that are cheap. Like if I can buy 1 million ounces for $12 million, or in some other cases, like I'm looking at deal, you buy 1 million ounces for $1 an ounce, right? Like you can find these things out there that have been developed and then got hit in this cycle. Like there's still these opportunities out there. Especially in gold, I'm seeing, right? Like copper is so hard. That's the problem. That's the hard thing with copper. It's like you need a big thing. Like it's very hard to find a real copper mine. That's why there's no new real copper mines, right? Like it's really tough. Gold, you can get like a lot of excitement going. You can get grades, and it shouldn't be different, but for some reason it is.
Yeah, it just is. I mean, it's partially because like we'll even look at the disparity in like. When you look at like gold, for instance, and this is something like we've all come to sort of terms with, or at least some of us have, which is like, you know, you sort of need a certain size of project to be worthwhile. And like you said, Matt, we have a keen interest on big ideas and big projects and district scale plays, right? Like we like big things. And there's always going to be space for things that aren't necessarily district scale, but they're good and they have good economics and there's inventoried ounces and, you know, they could be a thing. And so we're okay with those too, because... But if you look at the mandate for all the big companies, like whether you're Barrick or your B2 Gold or your Newmont or any of the big ones, right? They want those big district scale, big projects, those big areas that can garner a multitude of deposits and deposit potential. And but what's interesting about that is that, you know, even though that's the trend that we're seeing and there's sort of a disparity there, when you look at copper, it's like there is no small mom and pop scale copper, right? Like not that we can really discern, right? Like there's some of
like back in the 70s.
Yeah, like Arizona and stuff. There was some like, you know, there's some smaller ones, but by and large, like the barrier of material like this matters has to be super big for like the big copper miners to care.
Yeah, like they need a lot of, you know, for you need, you know, way more than your DCF will carry of mine life. And that's why the vicuña matters so much, right? It's not like, don't think about it as commodity, think about it like oil. Like I'm here for 100 years. That's why we like Mogotes so much, right? Because you have this 20-kilometer stretch that literally attaches to Filo. And that's going to go public. And even if they don't hit on their targets, like you can't build Filo with that there. Like you can't. Like you're not going to just let it sit there. So there's because it's too long a project. Like you have 100 years of mine life, realistically. And I was looking at a porphyry the other day, Cananea in the north of Mexico, north of Sonora, right? And this one started being mined in 1899. It's still being mined. It's a 4.5 billion ton resource. Like you don't really have that. That's not really a gold thing. It's just like, I mean, I think there's gold in the system, but that's what gets copper things going, because like the grade is not as high. So you need these giant projects, and I guess you can have the high grade VMS things, but it's a whole different market, right, for that copper. I mean, like you have these 20 million ton resources in Canada, right? Like up in Snow Lake. I mean, unless you have a consolidated thing, like what Hudbay did, obviously in Flin Flon and Snow Lake, you have all these VMS pods, or the Brunswick camp, right, back in the day. So that works if you have enough of it. But we seem to be having too many one-offs, like 15 million tons, 2%. It's a hard sell these days, right?
Yeah, it seems to be. It seems to be a lot harder to get something going on those sorts of things. Yeah. But you mentioned it. I mean, Hudbay did a really good job of doing it up in northern Manitoba.
But maybe costs were lower, right? Like they did that in the 60s. That's when that all came together, right?
Yeah. Well, I mean, and, you got to look at the timing of that too, and what was happening in South America and Chile and Peru and all those places. It's almost like what the gold climate was to justify the entities that existed in gold prior to Nevada in the 70s and the 80s with heap leach technology, and how that just kind of overturned. Like Nevada was, people have been gold mining in Nevada for ages, and it was high grade things. It was like what we see in the Abitibi, it was like high grade narrow vein type of operations underground, etc. And then all of a sudden in comes like heap leach and the no-seums and Carlin style kind of, big diffuse, low grade deposits that you could just pile this stuff and rain cyanide on it and get all this gold out of it. And that just changed everything. That changed what everybody was shopping for, it changed what everybody was searching for, it changed what everybody wanted to find. And it means that if you go back to Nevada and you look for high grade things, they're still there, right? Like a lot of them haven't been explored, which is partially
Borealis.
Why I like Borealis. That's why I like the Walker Lane. I love the Walker Lane.
Totally. Borealis has a historical hole, Borealis, 70 meters of like 17 grams.
Yeah.
It's a monster, man. It goes on. It's a big project, and you have this $28 million of replacement infrastructure on it. I'm excited for everyone to see this project. I think that when this is public, we'll get Kelly on. He can talk about it. I refrain to talk too much about this like insane shareholder registry he's put together. It's the best. Between that and the board, I don't think I've ever seen a junior under 50 million with so many famous people on the board and in the shareholder registry.
Yeah, it's super cool. Super cool. Yeah, it's super cool. And the project's, it's definitely an exploration project. I mean, it has production profile, which is cool. And it'll have cash flow from that, hopefully. But I think from the value I see in it is an explorer. It's an incredible exploration company.
He's gonna have to talk about that documentary of why it failed the first time as well.
Oh yeah, that's a crazy. Have you watched it?
Yeah, I watched it.
Have you seen it, Matt?
Oh yeah, of course. How can you? We can't. That's part of your due diligence. You have to.
Yeah, the Waterton thing.
Yeah,
it was crazy, man.
When Kelly started doing this, I think it was last January, right? So of 23. That was when he started going back and forth with Waterton, and we were chatting about it. And then actually, I think, Denny, you were the one that told me the documentary existed. Kelly failed to mention it.
Oh, yeah. At that time? Yeah. I was like, that's the asset with the documentary.
Yeah. No, I mean, I remember Griffin Gold in 2012, right? And I think that the failure is just, honestly, it was just bad timing, bad.
Yeah, anybody can look this up that's listening. It's like Griffin Gold documentary. It's like, what was the name of it?
Plus Borealis mine, maybe. Anyway, it's. I mean, they're pouring gold right now on care and maintenance, right? Like they've got this good plan. They've got a 5,000 ounce stockpile. Then they've got probably about 300,000 ounce in mine planning. That's the idea to produce over the next couple of years. And then there's so many other. Like this was an oxide mine in the 80s that was mining 5.5 gram gold in oxide, right? Like just nope. Like it's been a mine for a long time. I think that maybe they didn't plan the mine out maybe well enough in 2012, and they maybe were undercapitalized. Kelly is not. Borealis will not be undercapitalized, and I think that will be a big thing. But this, it has the potential to be making tens of millions of dollars as a junior over the next couple of years, and also drill this really great sulfide the below all everything is like these sulfides that carry these massive amounts of gold. They're super refractory, totally, but you're in Nevada, so it should be just fine. There's a lot of places like if you were in Canada with this thing, it would never work. There was a project in Ontario called it was so refractory. There was a Chinese company that came in, gave them lots of money. Mark Raguse was on the board. Jeremy was doing it.
It's just the one south of Timmins, wasn't it? No.
It's
was it the Timmins area one? It was very refractory.
Very refractory, and it was like 6 grams, and just impossible. You can't do it here.
I think it's the one south of Timmins. I think it was that one, and it was like a big deal. Like it had a good resource, good grade, everything.
Oh yeah, for sure. We owned it at Pine Tree. Like it was for sure. It was a real thing. I can't believe I'm forgetting the name. But this is in Nevada. It's still around. This is in Nevada, so it shouldn't be an issue. Hecla's right beside it mining. You drive 20 minutes from the town of Hawthorne. It's great. It's a really, there's a reason people really care about it. Like it's a really exciting project. I think that they're going to do a great job.
That's really cool. Yeah. No, I mean, look at we had really good deal flow. We still have really good deal flow, and then we got we were in the room and in the deal, and a bunch of really good things there. So. And like you said, we pressed some bets. So just back to my central, question to lead things off is like, what are we doing? And it's like, well, we're pressing the best things that we've got, and then we still have deals like that are coming up the food chain and coming into market, and we're pressing those too.
Yeah, I think the big idea. I think that like you have to have team. We're definitely. It's a time to be a little picky. So like to your point, you're pressing the ones that you're like, this is still really good value. But it's definitely not a time to be buying the whole market. I don't think.
Right. Yeah. Okay. Fair enough.
I still think you have to be very choosy, because if liquidity dries up, that's where you get stuck, right? It's not necessarily the prices fall, but you just run out. There's no bid. And so then what happens, right? Then like you could gap down in your portfolio any day. You gap up. It doesn't really matter, but it just stays forever. Because you can't ever get out, right? And so obviously we have a really long time horizon. We're this publicly listed company where you have no need for redemptions, and it's an amazing circumstance to be in, but you still eventually need liquidity. So I think that market buying, that like more free flowing capital, I think that we still need, back to our original question, you still need more of a longer horizon where you're like, oh no, we've been good for a bit here. Retail cares, and of course we will know that because we have the CEO and Mine.com and Northern Miner, and so you get this amazing sense of when there is this influx. So I think that we can be at the cusp of it all, but I don't think that we're quite there yet.
Yeah, and I think it's cool because that stuff gives us an edge to also watch when we're at the top of those things too. So that's something that we're fleshing out, by the day, but that's the type of visibility that we're gaining from having access to all that information, is understanding when tops exist as well and how to predict those to the best of our ability. I mean, obviously there's going to be factors that fall outside of that, right? That we're not going to have visibility on beyond the average bear, but there's definitely some information there that's helpful. What else do we want to talk about, guys, on this inaugural Crashlabs back from hiatus of Crashlabs?
Jays suck.
Yeah.
Kills me. They're not doing very well. Doesn't look good.
World of baseball.
Tried to follow it last season. It's pretty hard. They play like 2,000 games a season. It's impossible. There's like,
I don't care about
you go there and there's the old.
Is it like following the venture market where the TSXV has like 3,500 companies?
It's like the same. And then like 2 spectators in the stands during a Wednesday afternoon. It's like 2 investors.
That was me.
Yeah. And there's like
Matt's like, you guys suck.
Yeah. The share registry is like 6 names. Like what?
Oh no, I'm just thinking. Should we talk about anything else on the macro? Should we talk anything about our business, or we can save that for another episode?
We can save it. I like how you've been buying up some spot. Thank you for your support. Some Denis buying action.
Yeah, well, we looked into like the blackout stuff, and I think we're okay. And so long as
we went in there,
we went in there.
I went in there, got some.
Get the mop in the bucket.
The thing is, like when I got it, CEO.CA had that little SETI button thing. And then everyone started talking because you went in there, and I'm like, quit talking. Because like all of a sudden my SETI purchase was hidden in the stupid banter of you guys, and then all of a sudden you start buying $1,000 worth of shares. It's like SETI, Denny.
Yeah,
And
you got it all in like one trade.
Everyone's like, Denny's the man. Insider buying. I was like, I was there too, but no one cares. So thanks.
So basically, you were buying it to be noticed. Is that what you're saying?
Yeah, of course. Why else would I be doing? Just it's like that, and I think we're a good undervalued stock right now. But
I think it speaks to what we are. I mean,
Yeah.
look at it; it's a great way to play the market. That's why I was buying it.
Yeah,
I just think for no other reason other than I think personally it's undervalued. I probably can't say that legally, just as the CEO.
I want some exposure to these crazy stocks that Matt's been buying up.
Yeah, no, exactly. I think exactly. It's good diversified exposure into names that I would love to own myself, but don't, and own them through this. And so why not just own more of this? And that's the logic of it. And it's like,
and we're getting like a 50 to 80% discount on all of these.
Exactly.
Too, so.
And the timing's right. I think it was a timing thing as well. And yeah, from that perspective.
What's there, 130 million out on spot, right? Yeah, so 26. I still think that like the royalty is probably worth pretty close to that. Can I say that? Well, I did. So the royalty portfolio is somewhere close enough that that multiple of NAV would be.
Yeah.
Yeah, I mean the royalties have value. I think I mean obviously the equities, the cash, the businesses, the media assets. I think all of them have value that we're not seeing reflected in the share price. And I like the blend that we have. I think it's amazing. And I know that the Pine Tree comp is tough for people, right? When we say Pine Tree as a comp, it's like almost people get very angry and they get very and it's like, well, guys, it's not that hard to imagine, okay? You've got generalist capital coming into this space when there's a bull run, right? So bull run happens, generalist G money falls into the space at an exponential rate compared to what's already been swimming around in the space. That money's not going to take the time to learn the ins and outs of drilling, of grams over meters, and all the vernacular and the the nuances of trying to they're not going to get themselves educated. Most of that money's never going to do that. It's going to go first to ETFs. Then some of that money is going to search for more optionality than the ETFs have to offer because they're diversified across blue chip names, and so they'll do okay, but they're not going to be, most of the money is going to go there. Then it'll be derivative markets to that. Then there'll be like the majors, and people just buy baskets of those. And then there's always the thrill seekers that want more optionality. They want a little bit more risk, a little bit more reward. And so we're positioned right in the middle. Like they don't have to go out and pick their favorite. That's what we're doing. We're going out and picking the names because we know the space. And we're getting invited into these deals. We're in the room, we're in the deal, we're in earlier than they are. And hypothetically, we know how to pick them better. And we get invited into them at a cheaper price. And we're going to do better than and have more optionality to offer than the ETFs. And so there's not too many competitors for us in that space.
You become a derivative also, right? Like I know Pine Tree traded multiples of NAV, and the reason they did that also is because if you think about a private placement, right? Like you think about buying that, you're buying it at a discount to the market, and often, especially if you're playing not in a bull time, you get a warrant. And if there's a bull market that follows the warrant, then you're not just making that like 3x, you're making 4.5, 5, right? And that compounds very, very quickly, right? You have this tremendous torque to the market that very few people will have, right? So if you're in those deals, to your point, and they're priced well, and hopefully they're good, then it goes really fast. I only got to do it once when I saw what happened at Pine Tree, but Pine Tree went from 150 million to $1 billion in 2 years, from 2009 to 11, right? And yes, was there a problem because 75 million of debt was raised? Yes. Did Fukushima and the Euro debt crisis kill that? And yes, did paying the bonus with, there's so many things that happen. Of course, there were so many things, but like if you looked at Pine Tree's portfolio, if you took that same portfolio and you didn't really have to sell too much of it, it's probably $600-700 million today. We owned everything. Now that was good and bad, but we owned so many good deals back then. And I think that you know, it's important to learn from it. You know, there's no leverage here. There's no debt covenants. But that ability to play these deals and be there, it's the same idea, right? Like it's so people do get really upset with it and they say, well, it crashed. Why won't this crash? And
what a horrible comp, right? And it's like, well, what really wasn't though, like, cause it caught all of the money that sat between ETFs and individual stock picking.
yeah, it went from 10 cents to like $40 in the 2000s. It was literally like $40 pre-roll.
Yeah. It was like what is it? Like 11,000%.
Yeah, it was insane because it owned good deals, right? They had Gold Eagle. That was before we owned everything, right? So that was in the 2000s. They didn't own everything, right? So you had real torque. So our portfolio, because like it gets really hard when you have a $300-400 million portfolio in juniors. You can't own, like you have to move up the food chain, right? It gets very hard, right? But with $30-40 million portfolio, you are right in. You can only play the best names because you have to be really choosy. And so that's where, so I know that people get really upset. To your point, we get real pissed when you talk about it and it's like, it crashed. And it's like, yeah, but it you know, Sheldon created something really great where it was right. There was a reason it moved so well. There was a reason it was $1 billion NAV at one point, you know, it worked. So
yeah, well, it's you know, like the other thing to talk about there too, a big factor is the liquidity. I mean, it had unbelievable liquidity.
The stock.
Yeah, at that time, right? Okay. And I mean, that's because it was an instrument like that. It was something that was better than a call and a put on a blue chip ETF.
Yeah, and I mean, it had two runs, right? It did the 10 cents to $40 the first time, then it crashed. And when I came in 2009, I remember my first job was to find out what we owned in Australia, and we owned 64 names in Australia, and so we owned so much, right? Which obviously over diversification is still good, but then the stock did another run. It's like 20 cents and it went to $5. So those runs, those times where retail comes in, right? And to full circle, like I don't think we're there. We're not there. But that's where people go, right? They go where there's success. You know, we talk about things where here's our positions and hopefully they work. But
well, I think generally they don't want to buy. It's the learning curve thing for me. I'm going back to base principles. Like there's a certain portion of generalists, and it's rather large. It's bigger than the current mining crowd that's swimming around right now. And they're not going to do their homework. They don't want to do their homework. They want us to do that homework, and they want us to pick a diversified basket of names and give them.
We're going to be Kathy Wood's ARC in mining, in junior mining.
Yeah, we're not some like family office where their money's locked up and they have, you know, it's a publicly traded closed-end fund. They can buy into it by buying the shares. They can sell it when they want, and you know they can get in and out rather easily. And I think that's what we are. And then we have the media division bolted onto the side of that, you know, further assert our place in the sort of deal flow, like further strengthen our deal flow, make sure that we're always on top of the best, and notwithstanding offering a whole different type of torque on a shovel selling side of the business, you know, to a booming market. So I really like the value prop at EarthLabs right now, and I love the basket of names that we own. It's phenomenal, and I like where these businesses are going.
That's pretty good.
Good. Yep.
This is a fun time still.
Yeah.
Very
Still
fun.
having fun.
It's great. It's awesome.
Okay. Thanks for joining us, Matt.
Yeah,
Good to see you guys.
It was a good one, good first preliminary one, but we'll get our flow. Hit back for another episode.
For sure.
It's pretty good.
Okay.
All right,
All right, boys.
Bye-bye.
Yep.
Bye-bye.
All right, bye.